Santa Cruz Silver building Mexico's next mid-tier silver producer, trading on the TSXV under SCZ and on the OTC under SZSMF. Santa Cruz is set to be one of the lowest cash cost silver producers in the world, taking their Rosario mine into production in just 1 year after they became a public company. The management team has a proven track record, and roughly 70% of shares are held by insiders or institutions like BlackRock and Sprott Asset Management. Currently trading at just over $1, Jennings Capital just issued a buy recommendation with a 12-month price target of $2.75 per share. To learn more about this silver producer headquartered in Mexico, visit santacruzsilver.com or call 604-569-1609. All right, greetings and thank you for joining us at FutureMoneyTrends.com. I'm here at the Casey Summit in Tucson, Arizona, with legendary investor and speculator Rick Rule of Sprott Asset Management. Rick, thank you for joining us.
Always a pleasure. Thank you for having me.
Rick, I'd like to start off with some questions that came from our subscribers. I asked them to submit questions they'd like to ask wealthy individuals. So these aren't necessarily going to be about resources. Some of them are about stock trading. But the first question is, could you do it again? If left with nothing, could you become a millionaire? And overall, in general, how do you think you would do it?
Absolutely. There are opportunities in every circumstance and opportunities in every market. A good speculator is an entrepreneur, and an entrepreneur finds a need that he or she believes that they're equipped to fill and fill it. I think one wonderful example of that was Aristotle Onassis, a young Greek boy in Turkey when they were kicking all the Greeks out of Turkey. At 10 years of age, he supported himself and his family by buying packs of cigarettes, 20 cigarettes, and selling the cigarettes singly in traffic in Istanbul. In any set of circumstances, somebody who applies themselves to serving a market need, serving others and profiting by servicing others, can make money. This market or any other market. Absolutely I can do it. Absolutely you can do it. Absolutely the person who asked the question can do it.
That's great. What are some business sectors that you see as opportunities for young people today?
Well, certainly speculation for one. What I do. There's lots of volatility in the market, there's lots of risk in the market, there's lots of need in the market. But really, what I would ask a young person to do is to focus on their passion. Something that you enjoy doing. I mean, for myself, I've probably never worked a day in my life. That's strictly speaking not true, I guess. But I get up in the morning, I can't wait to get to work. It's not a chore for me, it's a passion for me.
Yeah.
As a consequence, I do it well. And as a consequence of doing it well, I make money for other people. I will tell you this, the surest way to wealth, irrespective of what your passion is to find a way to make rich people richer. Rich people value money. And rich people don't mind spending money to make money.
And they're looking for
It's odd, but rich people end up being much more generous. They're thought about it being stingy or greedy or something like that. In my experience, that's far from the truth.
Yeah.
Find a way to service rich people or to make rich people richer, and you will make money. But what's important is not to follow the money, but rather to follow your passion. Because in following your passion, you're going to deliver utility. And the way that you make money is by delivering utility. Money is the surplus of the utility you create over the utility that you consume. That's what it is. And if you create a lot of utility, almost irrespective of what you spend, you'll make a lot of money.
Yeah. This is a common question, and it's going to be a fastball down the middle for you, but it is a very common question from people. Why do the mining companies sell their products for less than the cost of production? Why not just say no, hold them, or stop producing? Because in other businesses, you just wouldn't do that.
It's a great question, and there's actually two answers. One, it's an extremely capital-intensive business. So if you have $1 billion stranded in the mine, one of the temptations is to win what's called the last man standing contest. You know that the price is going to turn, and you want to stay alive longer than the other guy, so that you participate in the turn. And of course, shutting down a mine and reopening it is very expensive. You have to cost whether or not losing money on an ongoing basis is or is not more expensive than shutting down and restarting a mine. The second thing is that many people in the mining business actually don't believe in their product. You'll notice in the silver business, there's only one silver company in North America, I think, that owns much silver. Most of them keep their working capital in US dollars. So one of the things that happens, one of the great unspoken sins of the mining business, is that many people in commodities-based businesses don't believe in them. And they operate their businesses for the salary. They're not shareholders. And for them, they're interested in what they call real yield, which is the yield to the managers, not the yield to the shareholders. And of course, they keep those businesses open for very different reasons, so that they can pay their country club dues and the private school tuitions for their kids.
It's a kind of scary thought, though, because the mine ultimately will be depleted.
That's correct. And one of the things that we have been able to do fairly frequently in very bad markets has been to buy deposits that aren't economic at that price point very cheaply and do nothing with them. Doing nothing is a wonderful investment strategy in the right market. And when the commodity price returns, sell the deposit whole at higher prices. You know, one of the odd things about the mining business is that we tend to, as an example in the gold business, take gold from a hole in the ground called a mine, spend a bunch of money on it, and then put it in a hole in the ground called a vault. And one of the things that people in the mining business need to consider doing is buying out of the money commodity deposits when prices are low and doing something that's hard, nothing.
Yeah.
And then when the commodity price returns to the point where the deposit's economic, sell the deposit whole to a developer. It's something that we did with Silver Standard. We took Silver Standard from a market cap of $3 million to $2 billion. It's something that we did with Pan American Silver. It's something that we did with Lumina Copper.
I'm sure
It's something that's worked very, very, very well for us for 20 years.
I'm sure people are going to be curious. The silver miner you made a reference to that possibly saves in silver, you're saying?
Endeavor Silver
Endeavor, okay.
is a mining company that listened to its shareholders and decided, since they had working capital that was surplus to their current needs, working capital is never truly surplus, but surplus to their current needs, that rather than store all of that working capital in Canadian and US dollars, that they would store some of their working capital in silver.
Yeah.
Their rationale, which I think is a good one, is that their shareholders were attracted to them because they were attracted to silver. And in terms of listening to the constituency, who were ultimately their bosses, their owners, the shareholders, it would be prudent and polite to store some of their working capital in silver. We would prefer, of course, as Sprott, being believers in precious metals in particular, that public companies that had surplus working capital that was waiting on investment, we would prefer that they stored some of that working capital in precious metals. A, because we think the precious metals in any recognizable time frame will outperform fiat currencies, but also because it evidences respect for the owners of the company, which are, of course, people that are attracted to precious metals.
Yeah. What is your criteria for selling a stock? And this is a good question, because everybody out there is always recommending to buy something, but nobody really ever talks about selling.
That's a very good question. We try never to buy a stock without having a plan as to what would cause us to sell it. So as an example, in a speculative stock, I'm not talking about investment quality stock, but a speculative stock, which I think is probably what most of your readers are interested in.
Junior mining companies.
Yeah, a junior mining company, that's pretty simple. You buy a junior miner because you think they're going to answer an unanswered question. And you try and figure out what the probability of a yes answer is and what the value of a yes answer is. So there's three possible scenarios. One is that they don't get a yes answer, they get a no answer. You sell the stock. If you bought the stock at $1 because you think the answer to an unanswered question is going to be positive, it's going to take the stock to $3, but you get a no and the stock goes to 70 cents, too many people say, well, I can't sell because I'll lose money. The stock has gone down. I'm going to wait till I break even. Well, why would you break even if you got a no answer? So if you get a no answer to the unanswered question, irrespective of if you're up, down, or sideways, you sell the stock. Your reason to own the stock is gone. The stock has to be gone. The second possibility is that you can get a yes answer, and your price expectation has been met. You buy a stock at $1 in anticipation of a yes answer, and you think that the yes answer will take the stock to $3, and that's what happens. Your plan has been fulfilled.
Yeah.
Declare victory, take the money, and move on. The third situation is that you can get a yes answer, but your price expectation isn't fulfilled, in which case you believe that the stock is undervalued. Or that yes answer sets up another question that has, from your point of view, a favorable risk-reward parameter. At that point in time, you have to sit down and rethink your goals, rethink your strategy with regards to the stock. So, in recap, you sell the stock if your goal has been met. You sell the stock if your goal hasn't been met. You don't sell the stock if your goal has been met, but your price expectations aren't met.
Okay, I think a lot of people are in category 3, question 3. Many objectives have been met with these mining companies. Some of them have gone to commercial production, but their share prices have just been demolished.
Well, it may be that many people that don't have enough experience in terms of the value that's created by yes answers have unrealistic price expectations with regards to the value of a yes answer. I think one of the reasons probably that Eric Sprott and myself have been more successful than most investors is we've done a very good job of hiring technical people who help us, first of all, understand the probability of a yes answer, and second of all, understand the value of a yes answer. And there's, in that case, more science than art.
Yeah.